live here with our 4 traders. We've got Dylan, Sheldon, David, and to 65 minutes trading it live. All right, so guys, have you all got in your accounts, $1,000 in your Gravity accounts?
Yes,
Sheldon,
sir.
you got $1,000?
Yes,
All right.
sir.
All right, Dylan, you got $1,000?
Ready to go.
Alessandro, you got $1,000, sir?
A bit of action here.
Let's get
$69, sir. Ready?
All right, then
On the money.
hit the start button, sir.
Starting.
All right, the clock has started.
Long.
From now, you can do whatever you want with $1,000 while we watch FOMC live and we wait for Powell's interest rate decision. For those guys who are watching interest rate decision. For those guys who are watching us live here, we're waiting for Powell's interest rate decision. We have Powell going to be coming out with the Fed interest rate decision. Am I lagging on YouTube? Is there like a bit of a lag? Someone says awful lag. Awful lag. Awful lag. Oh no. Oh no. Terrible lag. What are we going to do?
If they unshare their screens and we do it.
What do you mean unshare their screens and do it one by one?
Go for those things. Okay, we're back on.
Okay, are we lagging or we're not lagging?
We're lagging a bit.
We are lagging. Someone says heavy lag, heavy lag, heavy lag.
Okay, it's going.
Too much of a lag.
It's very laggy. It's because everybody shares screens are up.
Okay, so can we trade the FOMC live? Is that what's going to happen here? Okay, everyone says lag, lag, lag.
Yeah. Exit.
Yes.
To share their screens, regular guests and.
Okay, so we can't trade it live.
Not wanting to
Oh
work
man.
with me.
All right, well let's just cut the trading competition. Damn, we wanted to trade this thing live, but I guess we're going to just be watching the FOMC then, hey, as a team.
Has anyone taken a trade yet?
Say again.
channel. We'll stream Uncle. We'll jump on the 𝗙𝗥𝗃𝗗𝗏 channel. We'll stream Uncle and we'll trade in the background. What do you think?
Okay. All right. So you guys are going to go trade.
We can jump onto the back end on 𝗙𝗥𝗃𝗗𝗏. We can stream the FOMC and we can sit.
I think we'll try and stream the FOMC here if we can. So let's cut the other stream if we can. Let's cut the trading and we'll just do an FOMC if we can just get the FOMC. We've got 1 minute until the interest rate decisions, really. 1 minute until someone says no lag. Or is that because we've already lost a guest or what? Hey, wait, you guys are all here. No lag, low lag. Someone says turn off the comments. Maybe. Okay, hold on.
Doesn't look so bad, right?
It's getting better. Okay.
It's stabilizing.
Okay, it's stabilizing. Let's see if we can. Can I see the concurrent viewers? Let's see if we can get there. All right, let's. We're waiting for the Fed interest rate decision, which comes out like now, like literally should come out any second now. I'm looking at our newsroom to see what the Fed's basically saying. Are they going to increase rates? Are they going to decrease rates? Let's see what's. Well, they're not going to increase rates, but they're going to. Okay, is there a lag? If someone says, is there a lag? Let us know. Lag is better. Lag is okay. It's good. Don't cancel the competition. No lag. Amazing. No lag. Now, is there a lag? If we start sharing everybody's screen, is there a lag now?
Yes.
It's very laggy. Tired of this market. Let's see if we can get the stream going. Okay. Yes, we have a lag. It got better. Better now. Someone says if we turn off the comments, but you think that could slow things down? No.
Good. Close them.
Okay, the Fed announces that QT will end in December. That's a big announcement. So the Fed's announced that QT will end in December. Guys, are you trading, by the way? Have you started trading this market?
I'm long mantle right now.
Nobody don't hit market order. Make sure you hit limit. I just
you got to
hold and it fucking ended me, right?
Yeah, bro. What did you just buy?
I sold 𝗬𝗎.
Yeah,
and
that's the problem. The spread will eat you alive. You simply have to set limit orders.
All right, I'm giving you guys the information as I see it, and we will be crossing to the Fed. We will be crossing to the Fed live. Someone says picture laggy only. No lag. People are saying no lag, so maybe we can crack on. All right, so the competition's on. We're going to be listening to Powell live. Right now, what I'm getting is the following. The Fed announces that QT will end in December. That's quite big. So QT is going to end in December. There's a 25 basis point rate cut. Right now, if we look at Bitcoin trading at 111,800. That's where we pretty much at right now. We've got our 4 traders. Our traders are all trading away on gravity decks. Sheldon, are you trading or are you watching porn?
He's watching something else.
Don't judge, eh? It's just not that, bro.
What is that?
I don't
that's
know. It's just
not
the calmest life. I don't know.
Okay, so I'm going to keep bringing you the news as I get it. It says October FOMC decision, the Fed cuts rates as expected by 25 basis points. There were 2 dissents. Schmidt favored no cut and Mirren wanted 50 basis points. Remember that Mirren is the guy that is rumored to be Powell's successor as selected by Trump. The Fed will end QT on 1 December and mortgage-backed security redemptions will be invested into T-bills after that. The statement changes mark to market the outlook data. Notwithstanding available data is in the recent data. So we've got the full thing over here. Okay, FOMC statement compare. I mean, I don't think we really need to compare the statement. Oh man, it's doing that thing where it lags the screen share, so I can't really show my screen. Hold on, let me try and share the screen here again. Okay, so I guess we can't. I think we must just switch off the trading competition because it's just going to lag. Yeah. Okay. Yeah, that's too much. Just too much for the system to handle, right?
Yeah.
Okay, so guys, we're going to have to end the trading competition because we can't stream the competition, unfortunately. And well, we can
right now.
Who's
winning right now?
Oh.
Who's winning? I got more than $1,000.
What you got there, Alex?
Bucks up on this Trump. I'm short Trump.
You're short Trump.
At the moment.
Yeah.
David, what are you doing there? Hold on, someone said guys, let us know in the chat if there is a lag or there isn't a lag. Let's see what's going on here.
Oh.
Okay, let's have a look here. Treasuries extend drop after Fed cuts rates with 2 dissents. One of the dissents says that they shouldn't have cut rates at all. The other dissent said that they should have cut by 50 basis points. That's pretty much what's going on here. Let me actually show it to you so that you guys can see it over here. Okay, it doesn't show, but let's try and do it like this and share the screen. Yeah.
Those guys. Screen's off.
But then how can they trade if the screen's off?
Trade without showing us.
There we go. Okay, so we can see that. So there were 2 dissents. The 2 dissents were from Mirren, who was supposed to be Trump's guy, or who is Trump's guy, who is going to be potentially a successor to Powell. Fed will end QT on 1 December, so we know that at the moment. How is the market responding? Bitcoin is down 111,000. So the market, there was something in this thing that the market didn't like. I wonder what it was that the market didn't like in this FOMC, because they got the interest rate cut and they got the interest rate cut that they wanted, and they got the they got the interest rate cut and they got the end of QT on 1 December. So there is something in the data that the market didn't like. I'm seeing this tweet here from 𝗙𝗵𝗪 that says Bitcoin set to gain up to 12% over the next 12 days. All right, I think we need to cut the competition because it's lagging here and I can't actually share screens. Oh man, we have to cut the competition, unfortunately.
That is sad news.
But I can't share the screen. How are you guys doing? Unless we just have a competition and we don't do FOMC.
Just do the trading comp. No, we got to cover FOMC.
Yeah, we got
how long is it now? 25 minutes till Pat
Why
talks.
don't we reload this? Let's reload Banter Royale Friday. Let's go. Let's the 4 of us go Friday and do this thing.
Okay, you want
know what I can bring?
What can you
I'll
bring?
bring a chicken.
Stop,
you guys trade against a chicken.
Stop all sharing. Take turns sharing P&L.
Yeah.
Okay, right. So let's stop all sharing. So stop all sharing.
We could share when we.
So can we swap that one screen of all of them sharing?
When we do
They just have to unshare their stuff.
Just unshare your screens. I think let's see how that'll work. Let's see if we can still.
That'll give us more.
If we're still getting a lag, let's have a look here. Okay, now let's see if I can share my screen. Yeah, amazing. Now things. Well, no,
Screens are heavy.
I'm still not able to toggle in my. See, it's only showing one of the screens here. Unfortunately.
Okay.
Okay, let it refresh, and then maybe we can continue with the gang here.
What's going on? Guys, totally take your screen off.
Okay, let's see if that works.
They've got to also unshare this.
Okay, you guys have got to unshare your screens if you guys wanna. You guys have got.
Close them.
Will you unshare your screens, guys?
I think we have.
Yeah.
I've unshared, right?
All right. So
Well,
yeah, it seems like the problem is that when we try and share everybody's screens because we're pulling different screens from different people, it starts to work our computer too much. I think we need to get a much stronger computer for all of this. All right, let's carry on with our FOMC coverage. So in a few minutes, Powell's going to talk. In fact, in exactly 23 minutes, Powell's going to talk. In the meantime, I can give you what we know so far, which is that there is going to be end of QT. We know that Powell's cut interest rates by 25 basis points. We know that there have been two dissents, so to speak. So two of the Fed members came out and said that they weren't in agreement with the one interest rate cut. Stephen Mirren came out and said he wanted a double rate cut. Obviously, I think he's trying to get closer to Trump. And the other one that we had one other dissent who said that there shouldn't have been a rate cut at all. I must say, if I was sitting on that Fed board, I probably also would say that there shouldn't have been a rate cut at all because inflation is at 3.1%. Like, you don't cut rates when there's 3.1%. But the problem is that the labor market is getting very, very, very is getting killed. And the reason why the labor market's getting killed is not only because of economic affairs, but it's also because of AI. So like a lot of companies are now investing in AI and robotics, and that's driving massive unemployment. So I saw a tweet yesterday, and I'm sure I wonder if the researchers could send me that tweet that actually shows all the different job losses that are set to happen in the next couple of days or in the next couple of months. And so I think that that's also now impacting the Fed's interest rate decisions. We're going to keep covering right now, and we're going to be cutting to Powell live in a few minutes as soon as he's on. I think he's on in 21 minutes. We'll cut and we'll watch the FOMC live with you guys. In the meantime, I am waiting for all the updates as they come through. Let's see. I'm waiting for updates. Let's see what's happening. Let's quickly just go over to the price charts and just see how the market's responding to all of this. So price charts, let's have a look here. So you got Bitcoin back at 11,500. Remember, we started the day today at about 100, and we started the daily candle today at 112,670. We're now trading at 111,500. We had a slight dip. Okay, so here's the recent layoff announcement. I remember I was talking to you about the fact that the Fed is balancing interest rates and unemployment, right? And if you look at the unemployment numbers, these are the recent layoffs that have been happening. UPS, 48,000 employees. Amazon, up to 30,000 employees. Intel, up to 24,000 employees. Nestle, 16,000 employees. Now, the labor market's weakening, not only because of the economy, but it's also weakening a lot because of AI, and because these companies are now taking bets on AI. Like Amazon is very, very, very much now betting on robotics to be doing a lot of the work. So I think that this is going to be quite a big FOMC. I'm not expecting too much. I'm not expecting too much like difference from what Powell says in the statement. The statement's going to be nothing. I think what we need to look at is what Powell says after the statement in the press conference, and I think that's what we're going to be looking at. Let's see what the guys are doing here. Let's see if we still got the guys here. We still have the guys here. Yo, you guys, are you guys still trading? I mean, you can still trade, and then we can just compare P&Ls at the end. All right, so you guys are all trading. Yep. What's your balance, sir?
Not yet.
So
$1,007.
$1,007. David, what's your balance, sir?
973.
Okay, Dylan.
978.
And Sheldon's still got his $1,000. He hasn't started. Sheldon, you know what?
This time, bro. No, playing different this time. Let them go first, and then I'll come pick up the scraps, bro.
Applying some game theory this time, Sheldon.
Yeah. Last time I went all in, no stop
just
losses.
to win.
It wasn't great.
It's hard. Should you play to win or should you play to entertain? It's a dilemma.
Yeah.
No, last time I wrecked 50% of my account in like 15 minutes, bro. I think I entertained last time.
Sure.
Guys, if you're here and you had to watch FOMC with us, smash the like button, subscribe to the channel. Let's get people on there. I'm going to quickly.
So what are you guys trading? Who's in what?
I
I'm long mantle right now. I'm about to put in a limit to short BTC at 12,300. 112,300.
Yeah.
She's short.
For a short scalp. For a scalp, if it hits there, short scalp.
Oh, which exchange? I mean, my price is 111,530. Where are you getting? Where are you getting such a price, sir?
No. I'm saying I'm setting in a limit order now to short at 112,350. Obviously, it isn't there right now.
Okay.
If it gets there.
All right, so guys, we are waiting for the Fed to come on. The Fed are going to be on in 18 minutes. The boys here, the lads are sharing. Guys, at the end of this, you're going to have to share your screen, so you got to keep us updated on your balance. Keep us updated on your trades. Also, let's see if there's anything else coming out. Remember, I spoke to you about the job layoffs. So here are the job layoffs. Yeah, you've got recent layoffs. UPS. Let me give you a good explanation for those layoffs, which we read. Amazon laid off 30,000 employees today, even after an even larger cut during an industry contraction in 2022. The reason is simple. They don't have enough capex left to buy GPUs. As a result, AWS growth has slowed. The market has punished them harshly, and now they must cut salaries to save money for GPU purchases so financials look better. So the new capex, basically they need money for GPUs, and so the only way they're going to get the money for GPUs is to lay off people, and they're going to replace those people with robotics, which is like, I don't know, like absolutely crazy, like this world that we live in. Don't know if you guys saw, but there was a robot that, like a consumer robot that was launched yesterday, which cost less than $20,000. I want to show you guys this robot.
This robot is wild.
It's wild, eh?
And today we're launching Neo, our humanoid for the home.
Neo, the robot, Nene.
Let you live with it.
Yeah.
You're just not telling me? Well, what does it do?
Like my chores. I just leave and I come back and they're all done.
Are you kidding me?
No.
So that robot is available. That robot is actually available now for anyone to use for $20,000. You can actually buy one for $20,000, which is crazy. Like, you can start doing house chores with a real robot. So guys, we are here. 15 minutes time, Powell will start speaking. In the meantime, we haven't really had much coming out. I'm still waiting. I'm waiting for the guys to get active in the newsroom. Let's get going, guys. Let's see if there's anything else coming out around FOMC. Yeah, nothing.
Okay, I'm long Bitcoin here as well now.
You long Bitcoin? Probably a good bet.
Yeah.
Probably a good bet. What leverage are you on there, Alex?
50, always.
50x
Max. Always, of course.
What are these rookie numbers, bro? What are these rookie numbers?
That's max, bro. Look at that dial, whacked right up.
It's funny. I'm exactly.
I'm not on a 50x the whole account though, obviously.
So guys, for those of you wondering what's going on, these guys are all trading $1,000 live on Gravity Dex. So they're all trading on Gravity Dex. They're trading $1,000 live accounts at the moment. While we're waiting for the FOMC, and the idea is to trade through the FOMC, and at the end of it to see who's going to have the most, who's going to have the biggest account: Sheldon, Dylan, David, or Alex.
Right. If we struggle with screen shares, bro, what we should do is like
you can one at a time. You can share
like a little. Let's do like a little tournament, and then you can jump in and see our P&Ls at any point.
Yeah, we will build that. We will build that.
This is such a cool concept. I love it, bro.
All right, let's see what's going on here.
Man, how do you get one of those robots in your house?
Federal Reserve to end quantitative tightening on December 1st. Powell says ending QT is a form of risk management, similar to how he would describe rate cuts. What happened to my screen? Oh, okay, there I am. Let's see. So Powell says that ending QT. Here we go. So there's the tweet over there. Powell, I think that Powell will say that ending QT is a form of risk management, similar to how he described the rate cuts. Powell is losing his grip on the Fed. This is Michelle. Who's Michelle? Let's have a look here. Michelle, Powell is losing his grip on the Fed. Michelle, think you have to put Besant in the Fed. Have him lobby. Ooh, okay. So, oof, okay. Okay, let's have a look here. Let's see what else is going on here. Remember, guys, we are going to be watching the Fed coverage live in about 13 minutes when they actually come on. 13 minutes, guys. 13 minutes. You can trade whatever you want.
Bomb, bomb, bomb.
Where are my other two friends?
On a market order. Like what?
Yeah, no.
Did you just put in a market order?
No, you can't go market order.
Bro, you can't put in market orders.
Bro.
Wow, this
$5, bro. That's lunch, bro.
I just did that, bro.
Right.
No, bro.
I'm
We're playing for scraps here. You can't put in market orders.
How does you can see what's going on, right?
Oh my god.
Let's see what's going on here. So we're going waiting another 12 minutes for Powell to come on and actually read us a statement. Let's see what's going on here. Let's see if there's anything else that's coming out here. Federal Reserve key cuts overnight rate to. Here we go. Let's see what else is going on here. Federal Reserve cuts key overnight interest rates to 3.75 to 4%. Available indicators suggest economic activity expanding at moderate pace. Job gains have slowed this year. Unemployment has edged up, but remained low throughout August. More recent indicators are consistent with these developments. Inflation has moved up since earlier in the year. Uncertainty about economic outlook remains elevated. Policy committee is attentive to risks. Vote in favor of the policy was 10-2, with Fed Governor Miran preferring a 0.5 percentage point cut, and Kansas City Fed President Schmidt preferring no rate cut. So 2 dissents. That's pretty much what we know. Yeah. So yeah, it feels like there's quite a bit of dissent in the Fed at the moment. I guess the Powell statement will add it. Guys, how are the trading accounts doing?
$1,006.
That means you haven't started trading yet, Sheldon.
Money, baby.
You're cooking, bro. You're cooking.
I was $1,060, bro.
Oh, I see you made $6.
$6 cash.
Yeah, $6.
Okay, Alex, how are you going, bro?
I'm in this Bitcoin long now. That's $17 up. I got like 100, maybe like $20 up on the whole account.
Okay.
One Trump short scalp, and this BTC long from 111,200. And I'm going to sell it at around 12, and then I'm going to flip short at 12,300.
The man's got the plan. I like it.
All right, you've got 10 minutes until
trading 5-minute moving averages.
Whatever your plan you've got, you got 10 minutes until Powell starts talking. You got Bitcoin trading at 111,400.
Boring. Usually we have way more action.
Don't worry.
It's coming. I know.
Don't worry. When Powell starts talking, actually, Sheldon, every time me and you do these things together, there's no action, bro. We sit here till 10 o'clock at night, slaving away to please the community, and nothing happens every single time. Then the one time we don't do it. I
remember that day, bro. We still fought. Remember, we said it's not even worth it, and then we said that's the last time we ever
miss it.
Doing it. I remember that.
I mean, I must say, guys. This bull market's getting quite tough, eh? Like it's been quite a shit bull market, right? Like let's call a spade here. Let's call a spade here. This has been quite a shit bull market, eh?
Bro, I don't even know
It's been tough for a lot of people, for sure.
Is this bull market in the room with us?
I mean, how can you say like guys, Bitcoin's doubled this year? Like, why is this bull market being so shit? We just can't catch a break. We just can't catch a break this bull market. Every time we have a little bit of a run and then the whole thing just falls flat, or we have a little bit of a run and then Binance drags us of liquidity. I mean, it's just we just can't catch a break here. We can't catch a break here.
Yeah,
I'm concentrated in just a few alts, basically. There's the liquidity is fragmented so badly that only a few things can run at a given time. Like a few things over the whole cycle have done well and like managed to hold on to some of those gains, but those stories are like few and far between.
So yeah, I must say it's been terrible. And actually, I spoke to some people today, friends of mine, and like only now the truth's coming out about that Binance liquidation and how badly these guys got wrecked in the Binance liquidation. Like only now the truth is starting to come out. That's how it is. Yeah.
You got information on that? You can divulge?
No, I can't. It's people that probably don't want me to talk about the fact that they got wrecked.
Yeah. Fair.
QT, most don't get one key point. Markets thrive on predictability. That's coming out from, here we go. It says QT ends 1 December. Let the front running begin. Most don't get this 1 point. Markets thrive on predictability. Okay, so we have, let's have a look here.
I think I'm a libertarian.
So we have, we're waiting for more information to actually come out. Not much actually going on in terms of price action, and not much actually going on in terms of information that's actually coming out. So yesterday SOFR was blue, 16. Let's have a look here. Okay. October, this is from 𝗙𝗘𝗔𝗧𝗨𝗥𝗘𝗗. October FOMC decision. The Fed cuts rates as expected by 25 basis points. There were 2 dissents. Yeah, we know that. We've read that already. Let's see if there's anything else that's actually coming out. Today. Researchers, if you could send me a link to the Fed stream so we can actually get ready for that Fed stream. Make sure our sound is working. We can listen to Powell together. Not much going on. I must say, from a price action point of view, also not much going on. But don't worry, we know how to do this. We'll do the
chart.
Shall we share some setups we're looking for if we get some volatility?
Yeah, right. I don't mind. Let's share a chart, bro. Let's talk a bit of charts here.
Let me show you what I'm looking for, and let's see if we can catch something. So let me just dish out a few things here. So can you see my screen here, guys?
Can we share Dylan's screen here, or is it? Hold on. Yeah, we're gonna share your screen here. Hold on 1 second. Bad music. Okay, I'm gonna mute that so we don't have to.
I thought that was Dylan's music. I thought that was Dylan's trading music.
Come on.
All right, share your screen. We can then watch your screen, guys. I'm keeping an eye on Powell over here. As soon as he starts talking, I'll cross back to Powell.
There it is.
Okay, that's Dylan's screen. Dylan, your screen is shared.
Kind of looking for a little bit more volatility, and I was getting quite excited for a little wick on BTC. So I'm waiting for this dip into this guy. I've got a limit order set 110,400, and then I'm going to have a backup order somewhere around here, 109,700, somewhere in that region. So if we get a little wick into that zone, it feels like it's time. I mean, this thing's heavily overcooked here, so I think we're going to get a bounce. But I want this little wick here in the meantime. I'm also waiting on AAVE. I've gone into a little scalp long here, but the bigger picture AAVE chart, there's an entry a little bit lower down there that I've been tracking this guy at 225. So a little dip into that guy could be fun. And then I've got the SUI short that I thought I was selling the top there just now when we started at 258, but it was the market. It was a market sell, and it started me fucking midway down. I mean, so there we go. Immediately out the gates, like negative 35.
I lost $10,
bro. So yeah, those are the trades.
I'm thinking a little bit. I actually think Bitcoin's going to spike up first, and then we're going to drop to that 1 cent. I do think we're going to go down to that level. But I see that one low we lost recently on Bitcoin. Where was it? It was a little bit earlier today, which is at 112. I think we might go test there first and then come down. I don't know.
Why are you guys so bearish? I'm quite bullish about this. Like I don't know. Maybe I'm the only one here who's delusional, but I'm quite bullish about this.
Bro, if there's no fat green candle on FOMC, we know the moment he stops talking, the market tanks. But let's see.
Yeah, well, we got something. Look, if you can go back to my screen, Hardest, if you can just toggle back to my screen. We've got 3 charts up on my screen. You've got Bitcoin chart on the 3 minute. You've got the Nasdaq on the 3 minute. You've got Powell over here. We've got space for one more chart. What should I chart here?
What do you mean? Just for?
Yeah, I mean,
Just one token.
No, you can do anything you want. You can do Dixie. Let's put the bubbles on here and we'll put them on the live and just see what happens on the live, and we can actually see the energy.
See what Nvidia is doing. See how much volatility is there.
Okay, let's go to Nvidia. Trading view. Powell's going to be live in 3 minutes, guys, and then we'll hit it with Powell. Nvidia, NVDA. Okay, we're on the 3 minute on Nvidia here. So we got Nvidia on the 3 minute. You have Powell live. You have Fed music. All right, I'm gonna. Music. Okay, I'm running to the bathroom. You guys can hold the stream while I'm at the bathroom.
So, Dale, you in any trades right now? You're just waiting for that 110 level.
No, I'm in the SUI short and I'm in a 𝗙𝗍𝗄𝗧 scalp long here, just waiting to see what happens. And then Bitcoin high conviction play. I'm looking for a wick, like either a drop or a pump for the short at like 113,400, give or take, and a long at like 110, somewhere in that region. If we get a wick into that zone, so kind of just trying to be patient here. But it's hard, like, not to push buttons around you guys. Like, fucking hell. Like, the boys are actively pushing buttons. And I'm like, fuck, I got to do something here.
So some of these tokens, the liquidity is so thin, though. Like, I'm going long this 𝗘𝗿𝗁 right now. You know, you seen that Opera AI or something?
Look at that thing.
𝗘𝗍𝗄𝗧. Chain Opera, I think it's called.
That is absolute dog shit at the moment, man. That
thing is so volatile. Every day I check like bubbles, and it's like plus 50%, minus 50%
stuff. But like, I tend to stay away from that. Like, I let the chickens do it the other day.
Can I just share my screen? Let me see if I can share the screen here.
Oh my god, you got this 50.
You know this. Let me see if you.
Hold on.
Let's see if we can share screen.
I can see your screen. I can see a Solana screen here in front of me.
Yeah. Can the rest of you see it?
It's not on the stream. It's not on the stream right now. It's just the white.
I'll have it for you now.
Guys, I'm doing Banter Royale on Friday, but I'm thinking I'm going to host this thing. What about you, Alessandro, and Dave trade against Jeff on Friday?
3-1, all against him.
You guys trade against Jeff. Well, I mean, not 3-1, but Jeff enters the comp.
Well, let's go.
Yes, bro.
Who's Jeff?
All right, chaps. Can I get the view account, please, Horace?
Wait, quickly look here. Look here, I want to show you guys something. So, you know, Zcash has done crazy things. Absolutely insane rally. Have you guys seen the Zcash to Bitcoin chart?
Show me.
You're going chat.
Show.
Check
all right, Powell's coming on, just so you know.
Okay, so that's obviously what has recently happened. Check this chart, bro.
That's every chart that's been around for long enough to be crushed that badly against Bitcoin.
All right, let's switch screens, guys. Let's switch screens.
10x, bro. Mental.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although some important federal government data have been delayed due to the shutdown, the public and private sector data that have remained available suggests that the outlook for employment and inflation has not changed much since our meeting in September. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals and in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by 0.25 percentage point. We also decided to conclude the reduction of our aggregate securities holdings as of December 1. I will have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a moderate pace. GDP rose at a 1.6% pace in the first half of the year, down from 2.4% last year. Data available prior to the shutdown show that growth in economic activity may be on a somewhat firmer trajectory than expected, primarily reflecting stronger consumer spending. Business investment in equipment and intangibles has continued to expand, while activity in the housing sector remains weak. The shutdown of the federal government will weigh on economic activity while it persists, but these effects should reverse after the shutdown ends. In the labor market, the unemployment rate remained relatively low through August. Job gains have slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Although official employment data for September are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index suggest that total PCE prices rose 2.8% over the 12 months ending in September, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8% as well. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or two or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 0.25 percentage point to 3.75% to 4%. Higher tariffs are pushing up prices in some categories of goods, resulting in higher overall inflation. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. With downside risks to employment having increased in recent months and risks to employment has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. We continue to face two-sided risks. In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it. Policy is not on a preset course.
Look at the charts.
At today's meeting, the committee also decided to conclude the reduction of our aggregate securities holdings as of December 1. Our long-stated plan has been to stop balance sheet runoff when reserves are somewhat above the level we judge consistent with ample reserve conditions. Signs have clearly emerged that we have reached that standard. In money markets, repo rates have moved up relative to our administered rates, and we have seen more notable pressures on selected dates, along with more use of our standing repo facility. In addition, the effective federal funds rate has begun to move up relative to the rate of interest on reserve balances. These developments are what we expected to see as the size of our balance sheet declined and warrant today's decision to cease runoff. Over the 3.5 years that we've been shrinking our balance sheet, our securities holdings have declined by $2.2 trillion. As a share of nominal GDP, our balance sheet has fallen from 35% to about 21%. In December, we'll enter the next phase of our normalization plans by holding the size of our balance sheet steady.
Sheldon,
for a
just
time,
unshare your screen.
while reserve balances continue to move gradually lower as other non-reserve liabilities, such as currency, keep growing. We will continue to allow agency securities to run off our balance sheet, and will reinvest the proceeds from those securities in Treasury bills, furthering progress toward a portfolio consisting primarily of Treasury securities. This reinvestment strategy will also help move the weighted average maturity of our portfolio closer to that of the outstanding stock of Treasury securities, thus furthering the normalization of the composition of our balance sheet. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting our maximum employment, bringing our inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans.
Okay, that's me, don't worry.
Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
All right, let's go. Question time. Question time. Question time.
Nick Timmeros of the Wall Street Journal. Chair Powell, are you uncomfortable with how market pricing has assumed a rate cut is a foregone conclusion at your next meeting?
Well, as I just mentioned, a further reduction in the policy rate at the December meeting is not a foregone conclusion, as I've just said. So I would say that needs to be taken on board. We had, I would just say this, 19 participants on the committee. Everyone works very hard at this and takes their obligations to serve the American people very seriously. And at a time when we have tension between our two goals, we have, strong views across the committee. And as I mentioned, there were strongly differing views today. And the takeaway from that is that we haven't made a decision about December. And, we're going to be looking at the data that we have, how that affects the outlook and the balance of risks. And I'll just say that.
You and some of your colleagues have framed last month and maybe today, I won't put words in your mouth, there's a risk management exercise. At what point do you conclude that you've taken out enough insurance? Are you looking for some kind of improvement in the outlook, or could this unfold along the lines of last year, where you made a sequence of adjustments and then waited to gather more information?
So the way I've been thinking about it is the risks to the two goals. For a very long time, the risk was clearly of higher inflation. And then that has changed now. And as we saw particularly after the July meeting, we saw
sounds like he's lost control
in job creation. We saw a very different picture of the labor market, and it suggested that there were higher downside risks to the labor market than we had thought. And that suggested that policy, which we had been holding at a I would say modestly, others people would say moderately restrictive level, needed to move more in the direction over time of neutral. If the two goals are sort of equally at risk, then you ought to be at neutral, because one of them's calling for you to hike and one of them's calling for you to cut. So if that got back into balance, then you'd want to be roughly at neutral. So in that sense, it was a risk management. And I would say the same about today, sort of the same logic. But as I mentioned, going forward is a different thing.
Claire. Claire Jones, Financial Times. Thank you for taking this question. We've just heard from you that the discussion in December and the conclusion of the discussion is not a foregone conclusion. I'd like to just dig into that a little bit more about what sort of arguments were brought up. Was there any consideration, for instance, of the investment we're seeing in AI and some of the generation of household wealth through rises in stock prices related to the AI boom? Thank you.
I wouldn't say that's a factor in everyone's assessment of the economy. I wouldn't say it's the driving factor. I don't think for anybody. I guess I would say it this way. Once again, I would just point out that we have the situation where the risks are to the upside for inflation and to both of those. You can't address both of those at once. You've got a very different situation. So you have some people have different forecasts, right? So they'll feel they'll forecast faster or slower progress on one or the other. And they also have different levels of risk aversion. And, some will be more averse to inflation overruns, and some will be more averse to underruns of employment. And so you put that together, and as you can see from the SEP and from the public discussion that goes on between the meetings when participants go out and talk, they're very disparate views. And they were reflected in strongly differing views in today's meeting, as I pointed out in my remarks. And that's what leads me to say that, that we haven't made a decision about December. I always say that. It's a fact that we don't make decisions in advance. But I'm saying something in addition here, is that it's not to be seen as a foregone conclusion. In fact, far from it.
Can I just ask a quick follow-up on QT? How much of the fund impressions we've seen in money markets are related to the U.S. Treasury issuing more short-term debt?
That could be one of the factors, but the reality is we've seen, the things that we've seen, higher repo rates and federal funds rate moving up. These are the very things that we look for. We actually have a framework for looking at, what the place we're trying to reach. What we said for a long time now is that when we feel like we're a bit above what we consider a level that's ample, that we would freeze the size of the balance sheet. Of course, reserves will continue to decline from that point forward as non-reserve liabilities grow. So this happened, some things have been happening for some time now, showing a gradual tightening in money market conditions. Really in the last, call it 3 weeks or so, you've seen more significant tightening, and I think a clear assessment that we're at that place. The other thing is, the balance sheet is shrinking at a very, very slow pace now. We've reduced it by half twice, and so there's not a lot of benefit to be holding on to get the last few dollars, because again, with the balance sheets, the reserves are going to continue to shrink as non-reserves
call on the
grow.
sweep
So,
there, Joel.
there was support on the committee as we
get
thought
it?
about it to go ahead with this
Yeah,
and
you got one
announce
order in, and
effective
that's
December
soon.
1 that we will be freezing the size of the
There's
balance
quite
sheet.
a bit
And
from
the
stop
December
losses
1
there.
date.
So, Dill, what did you get in there, sir?
Like the fucking absolute top. But I had a TP that closed for like a $20 profit, and then I got the BTC long now at 109, 110, 400.
Okay, so what's the positions, guys? What's Sheldon? What are you on? Still on $1,000?
No, 712, sir.
Dylan?
I got stopped hard.
899.
David?
I got getting rinsed on an AAVE long here.
David?
Champ again.
Well, what's David on? I
I
didn't
just
hear.
got absolute 11.49.
Yeah, 11.49.
And you, Alessandro?
I'm down, bro. I'm underwater on a Bitcoin long. I had
The
a
labor market is a place where we get, for example, we get the state level data on initial claims, which are sending a sort of a signal of more of the same. We also get job openings, and we'll get lots of survey data. We'll get the Beige Book and things like that. So we'll have a picture of what's going on in the labor market, and the fact that we're not
Very
seeing an
bad to
uptick
lag.
in claims or a downtick really in openings suggests that you're seeing maybe continued very gradual cooling, but nothing more than that. So that does give you.
Don't have that data in hand. I'm just wondering how that hinders the committee's ability to assess the state of the labor market and make the right policy decisions, and also how much is that factoring into the debate about December?
Yeah. So we get. I mentioned what we get in the labor area. We get some data in inflation, some data in economic activity, and we'll have a picture of what's going on. We also will have the Beige Book again. I would say we're not going to be able to have the detailed feel of things, but I think if there were a significant or material change in the economy one way or another, I think we'd pick that up through this. So in terms of how it might affect December, it's really hard to say. December's the meeting's like 6 weeks away. We just don't know what we're going to get. If there is a very high level of uncertainty, then that could be an argument in favor of caution about moving, but we'll have to see how it unfolds.
Steve.
Steve Leisman, CNBC. Mr. Chairman, can you characterize the meeting in terms of, you said strongly differing views. Was this a close call, this cut, or was it a close call maybe the other way because you had dissents on both sides? Thanks.
So I was referring to the discussion about, to the extent it related to December. You saw we had two dissents, one for 50 and one for no cut. So, you know, that was a strong, solid vote in favor of this cut. The strongly differing views were really about the future. What does that look like? And I think people are saying, you know, they're noticing stronger economic activity. You know, forecasters generally, broadly, have raised their economic growth forecasts for this year and next year, in some cases quite materially. In the meantime, we see, you know, a labor market that's kind of, I don't want to say stable, but it's not clearly in motion. It's not clearly declining quickly in any case. It may be just continuing to gradually cool. And again, people have different forecasts and expectations about the economy and different risk tolerances. And so there's you know, you read the SEP, you read the speeches, you know there are differing views on the committee, and to the point where I said what I said.
And just to follow up on the balance sheet, if you stop at the runoff now, does that mean you have to go back to actually adding assets sometime next year so that the balance sheet doesn't shrink as a percent of GDP and become a tightening factor?
So you're right. The place we'll be on December 1 is that the size of the balance sheet is frozen. And as mortgage-backed securities mature, we'll reinvest those in Treasury bills, which will foster both a more Treasury balance sheet and also a shorter duration. So that's what, in the meantime, if you freeze the size of the balance sheet, the non-reserve liabilities, currency, for example, they're going to continue to grow organically. And because the size of the balance sheet is frozen, you have further shrinkage in reserves. And reserves is the thing that we're managing that has to be ample. So that'll happen for a time, but not a tremendously long time. We don't know exactly how long. But at a certain point, you'll want to start reserves to start gradually growing to keep up with, you know, the size of the banking system and the size of the economy. So we'll be adding reserves at a certain point, and that's the last point. Even then, we didn't make decisions about this today, but we did talk today about the composition of the balance sheet, and there's a desire that the balance sheet be, right now it's got a lot more duration than the outstanding universe of Treasury securities, and we want to move to a place where we're closer to that duration. That'll take some time. We haven't made a decision about the ultimate endpoint, but we all agree that we want to move more in the direction of a balance sheet that more closely reflects the outstanding treasuries, and that means a shorter duration balance sheet. Now, this is something that's going to take a long time and move very, very gradually. I don't think you'll notice it in market conditions, but that's the direction of things.
Janelle.
Janelle Marte with Bloomberg. How are officials interpreting the latest CPI report? So some components came in lower than expected, but core inflation was still at 3%. So at this moment, what are you learning about the drivers? And also, do you view that the risks are greater that the Fed makes a mistake on employment or inflation?
So, okay, so the September CPI report, we didn't get PPI after that, which is important for translation into what we look at, which is PCE inflation, but we can still make a pretty good assessment of what that will be. When we get PPI, there might be some adjustments, but so directionally, you know, it was a little softer than expected, and we always break it down into the three components. So basically, you've seen goods prices increasing, and that's really due to tariffs. And that's compared to a longer run trend of very, very
the tariffs are temporary, man.
Goods. So that's moving inflation up. On the other side of that, good news that housing services inflation has been coming down and is expected to continue to come down. So if you remember a couple of years ago, that's the one that we kept expecting it to do that. Now it's been doing that for some time, and we'll expect to continue that. That leaves the biggest category is services other than housing services. And that's kind of been moving sideways over the last few months, but a significant part of that is non-market services, and we don't take a lot of signal about the tightness of the economy from that. So if you add all that up, couple things to say. One is that inflation away from tariffs is actually not so far from our 2% goal. We estimate, people have different estimates of what that is, but it might be, 5 or 6 tenths. And so that, if it's 2.8, then core PCE, not including tariffs, might be 2.3 or 2.4 in that range, something like that. So that's not so far from
$300 million liquidated from the crypto markets in the last 15 minutes. For fuck's sake.
Inflation is the base case.
Dylan, was that you, bro?
Will come.
I'm 1,046. I'm making a little comeback
further.
here.
That was on your side
It
account,
will
Bill.
be a one-time increase, and we've been very
on my
focused
Bitcoin
Bill's head on another
all of this
account.
year at making sure that that's the case. And
All right,
thinking
chaps,
carefully.
what's the score here? What's the score here? Sheldon, what's the score?
I am 840, sir.
840. Dylan?
6.
You're cut out for the first part.
1,046, sir.
David?
1112.
Okay. Alex, do you still have any money in your account, bro?
It's just about. I'm on $900.
Oh, no, you're stuck. You're in the game, bro. You're in the game. All right,
Sorry, say the first.
The stubborn services inflation that you mentioned.
Service inflation. Yeah. Well, again, the part of services inflation that isn't coming down as we would like it to is the non-market part of non-housing services. And overall, that's just something that we expect will come down. The non-market part of it should come down. It largely reflects higher stock prices and financial services that are imputed rather than actually paid is a big part of that. But also just, we think policy is still modestly restrictive in my telling. So that's the kind of thing that should lead to a gradually cooling economy. That's one of the reasons you see a gradually
Bitcoin's
cooling
climbing
labor
nicely. I hope you
market,
motherfuckers
because,
are long.
The Fed policy is modestly restrictive. So that should also help get that. I want to say, though, we're absolutely committed to returning inflation to 2%. If you look at longer-term surveys or market pricing, you will see that's a credible commitment, and there should be no question that that's where we're going.
Chris.
10:20 after, so we can.
Great, thank you. Chris
Great
Reader,
aftermath.
Associated Press.
You got 6 minutes,
So
guys.
there's
You got
a
6
big
minutes.
investment boom
bruh.
in AI infrastructure right now, as you know, and
just
wondering
got
if
in,
the
bro.
existence of such a boom would indicate that rates are not that restrictive after all, and could further rate cuts at this point perhaps fuel an excess level of investment there or market bubbles. How is the Fed thinking about that?
You're right. There are a lot of data centers being built and other investments being made around the country and around the world. Big U.S. companies are just investing a lot of resources in thinking about how AI, which will be based on those data centers, run through those data centers, is going to affect their businesses. So it's a big deal. I don't think that the spending that happens to build data centers all over the country is especially interest sensitive. It's based on longer run assessments that this is an area where there's going to be a lot of investment and that's going to drive higher productivity and that sorts of things. I don't know how those investments will work out, but I don't think they're particularly interest sensitive compared to some of the other sectors.
And then just a quick follow-up. Could you mentioned that you do have data that you're looking at for inflation and growth in the absence of government data. Could you give us a sense? I think we know a lot about the jobs data that's out there. Can you give us a sense of what you're looking at to track inflation in the absence of government data? Thank you.
So it's a lot of things, and it doesn't replace government data, but you know all of these. I'll just mention some of the many names.
Use Trueflation.
Adobe and others, for wage inflation, there's ADP data. On spending, you're going to ask about spending at some point. There are lots of other things that we look at, but it's many different sources, and again, including what we get out of the beige book, which will be sort of come out mid-cycle as always. And it doesn't replace the government data, but it gives us a picture. Again, I think if something material were happening, if there were material developments, I think we would pick that up. I don't think we'll be able to have the very granular understanding of the economy while this data is not available.
Howard.
Chaps, you have 3 minutes.
Howard Schneider with Reuters. Thank
Put
you.
an extra 10, bro.
I just wanted you to elaborate a little bit on what you said a moment ago about
3 minutes.
the continued shutdown, making it more difficult to make a move in December, and that may make you more cautious. To the degree you are relying on private data that isn't the gold standard, or that you're relying on your own surveys or the beige book, do you worry at some point you're going to have to start making policy by anecdote?
You know, this is a temporary state of affairs, and we're going to do our jobs. We're going to collect every scrap of data we can find, evaluate it, and think carefully about it. And that's our jobs. That's what we're going to do. If you ask me, could it affect the December meeting? I'm not saying it's going to, but yeah, you could imagine that what do you do if you're driving in the fog? You slow down. So that could or could not. I don't know how that's going to play into things. We may get the data may come back, but there's a possibility that it would make sense to be more cautious about moving. I'm not committing to that. I'm just saying it's certainly a possibility that you would say we really can't see, so let's slow down.
As a follow-up in the debate on this meeting, we saw recently some pretty big layoff announcements coming from Amazon and others. Wondering if that figured into the discussion at all, that you're starting to see this tension between growth and employment starting to be resolved, to the detriment of employment. And secondly, some of the stress is starting to appear in the bottom spur of the K, as they call it, household health premiums that are going to possibly be going up quite substantially, things like that. Has that started to become a factor in your policy discussion?
So those are both things that we're watching very, very carefully. To start with the layoffs, you're right. You see a significant number of companies either announcing that they are not going to be doing much hiring or actually doing layoffs, and much of the time they're talking about AI and what it can do. So we're watching that very carefully. And yes, it could absolutely have implications for job creation. We don't really see it in the initial claims data yet. Now, it's not a surprise that we don't. It takes some time for it to get in there, but we're watching that really carefully. But again, don't see it yet in the initial claims data. On the K-shaped economy thing, I would say the same thing or similar thing. We are. If you listen to the earnings calls or the reports of, big public consumer-facing companies, many of them are saying that there's a bifurcated economy there, and that consumers at the lower end are struggling and buying less and shifting to lower-cost products, but that at the top, people are spending at the higher income and wealth, and so much anecdotal data on that, and so we think there's something there.
All right, chaps. I think this FOMC is pretty much toast, to be honest. Yeah. All right, what are your balances, guys? Okay, so Alessandra's wrecked, bro. I can't even see him. That's why.
You can't see me. What's going on?
No, your camera's off. You can't. I mean,
what? You joking?
Yes.
I can see myself with my camera.
I
don't understand. What is going on?
All right. What's your balance?
820.
Okay.
But
David.
the positions are only just sold now.
1168.
Okay, 1168.
You got it.
Dylan?
059.
Again? Say again?
9.
All I hear is 9. What do you... Something's wrong with his mic, hey?
I can hear him fine. 1,059, he said.
All right, so David wins again.
Hang on, I'm on. What's the winning balance? I'm on 1,050. Dave wins again now, I think.
Bro, you cannot beat Degen Dave. This guy's undefeated.
Well done, bro.
You come again on Friday, bro. Come trade on Friday.
Yeah, Friday. Dylan's hosting another Banter Royale. So if you guys want to play, Friday Dylan's hosting.
and we bring in a special guest. Honestly, I think we bring in.
Let's go.
We bring in a chicken run. I think we bring in Jeff.
Okay, you bring in Jeff, bring in the chicken, bring in Jeff, bring in the chicken. Guys, listen, it's been amazing. Thank you so much. Thank you for trading.
Lots
Thank
of
you.
love, guys.
Lots of love, guys. See you guys again tomorrow. Until then, trade well, my friends.